The VA home loan is one of the most powerful mortgage products available today. It is guaranteed by the U.S. Department of Veterans Affairs, and the benefits are amazing, like a $0 down payment and no private mortgage insurance required. Eligible servicemen or women, veterans, and even some military spouses can buy a home using these amazing benefits. Now, before we jump into the numbers and compare it to other loan products, let's take a look at the good and the bad of the VA home loan. Here's the good: no down payment, which means it's much easier and more money stays in your pocket. However, some people choose to make a down payment for benefits, and we'll talk about that later. No PMI, also known as private mortgage insurance, so your monthly payments are less. Private mortgage insurance is essentially a fee you would pay if you didn't have 20% down on a traditional loan product. What else? Interest rates for VA home loans are highly competitive. Credit and DTI requirements are not as stringent, and closing costs can sometimes be a lot lower. Now let's cover some of the restrictions and pitfalls. First off, there's the VA funding fee, which is a fee paid directly to the Veterans Affairs, but the fee is generally rolled into the loan. There are also some exclusions on the type of house you can purchase with a VA loan, like you can't buy a single wide trailer or mobile home, and you can't use the VA loan to purchase an investment property. Lastly, there are a lot of real estate agents and sellers who are not up to date with the recent changes and just how awesome the VA loan has become. That's why you want to work with a lender and realtor pair that specialize in working with military families and know the VA home loan. Now that you know the pros and cons, let's jump into the numbers. Like any other loan product on the market, VA home loans do have some costs and fees associated with them, but some of these can be bundled into the loan, keeping your closing costs at a minimum. Let's take a closer look at the VA funding fees. The VA funding fee is a one-time cost that is paid directly to the Department of Veterans Affairs and is a fee that is applied to every home purchase or refinance. This fee makes it so the government can keep the VA home loan program running for future generations of military families by protecting a lender against default. The cost of this funding fee ranges from 0% to 3.6% depending on a number of factors, including the type of loan, the down payment amount, how many times the veteran has used a VA loan, and whether the veteran has a service-connected disability. The funding fee can be bundled into the loan and paid over time, or you can choose to pay it in full at closing. Let's take a look at the fees. If it's your first VA loan and your down payment is under 5%, your funding fee will be 2.3%. For your second time use and on, your funding fee will be 3.6%. Regardless of it being your first or 10th VA loan, if you make a down payment of 5%, your funding fee is reduced to 1.65%. If you make a down payment of 10%, it reduces to 1.4%. So, although a down payment isn't required, it can help you save on some costs. You may want to know that the VA funding fee is waived for veterans with a service-connected disability of 10% or more, active duty service members with a Purple Heart, or a surviving spouse. All right, let's take a look at closing costs. Both buyers and sellers have their own set of closing costs. Sellers will typically pay the commission that goes to both the buyer's agent and the seller's agent, typically about 5 to 6% of the purchase price. The seller will also pay a few other costs like transfer taxes, the owner's title insurance, and the property taxes for that year up until the date of sale. As the home buyer, you will typically pay closing costs ranging from 2 to 4%. This includes fees like processing, underwriting, and discount points that your lender provides. Closing costs also include paying for various inspections for the home, like an appraisal, a home inspection, and a termite inspection. You also have your third-party fees like title and escrow fees, and any other associated fees that go to an attorney or title company to verify the home has a clear title. Last but not least would be any possible taxes and insurance due to secure the property. Now that you know the various costs and fees, let's talk about the investment opportunities and tax incentives. With no down payment required, VA home loans are potentially a great investment tool. However, there are some limitations. The main limitation revolves around occupancy. The VA requires the home purchase to be the veteran's primary residence for at least 1 year. Generally, there are 3 exceptions to this occupancy rule. The first one is if the veteran is on active duty and receives orders to relocate to another duty station. The second being an active duty member intends to have their immediate family occupy the home on his or her behalf. And finally, general life changes like marriage or children that would make it difficult to continue occupying the home. Once the year is over, you are free to move out of the home as you need and are allowed to rent the house out as an investment property. That rental income can then be used to help lower your debt-to-income ratios, helping you qualify for other home loan products in the future. When it comes to taxes, the VA loan has some pretty significant tax benefits a homeowner can take advantage of. These include the ability to deduct a variety of costs like mortgage interest, discount points, VA funding fees, origination fees, property taxes, and any other eligible expenses from your annual income tax. There are a few additional property tax exemptions that you may qualify for if you have a VA disability or certain awards like a Purple Heart. We recommend talking with your tax consultant to see which of these apply to you. Needless to say, the VA loan is a very powerful loan product that you should be taking advantage of. To close out this video, I would like to point out some myths that you may have heard about the VA loan. One myth is that the VA has a 620 credit score requirement. That is 100% false. While the VA does have rules revolving around credit as a whole, they do not assign a specific number that you must have in order to qualify. Another myth is that the VA loan has a debt-to-income ratio threshold. That is also not true. Our underwriters take a more holistic approach by reviewing the file as a whole to determine a veteran's approval amount. The final myth for this section is that you can only use your VA loan one time. Veterans every day are using their VA loan for the second, third, or even fourth time. We will cover how in an upcoming section. This concludes our video on VA loan basics. For more information about this subject, please read the content below this video or get in touch with our team by clicking the Apply Now button in the top right-hand corner of the screen.